Well, it's raining QIPs, and my colleague Ritu Singh has picked up some very interesting details about the ICICI QIP, which has just been closed. Ritu, what have you picked up?
Well, Lata, just to correct, technically ICICI Bank's book is not closed. It remains open, for a couple more days. But they've received enough demand. Almost 62,000 crores of bids have been received so far for the QIP. The issue size, remember, is only about 15,000. So that's over 4x demand for its book. And this kind of demand is understandable given the valuations at which the bank is trading. This is the first fundraising by ICICI Bank since 2007. So there is a lot of demand in the market for them. GIC, Wellington, Fairfax, Eastbridge, Brookfield, CDPQ, I mean, you name it, all of the large FPI investors have participated. Among the domestic ones are HDFC Life, SBI Life, Birla Mutual Fund, Axis Mutual Fund, Kotak, Premji Invest. All the marquee names you can count in the market, they've all come to participate. And so far, 4x demand. I mean, it's a very, very good response for ICICI Bank.
Okay.
If I may add, now, we've just picked up, the books have indeed been closed.
Oh, right. Okay. Yeah, that's what we picked up. But anyway, thanks, Ritu. That's a wealth of details that you're putting on the table. Source-based information, but it looks like it's 4 times subscribed, the ICICI QIP, and the markets are opening with a decent bang, 70 points higher. We'll attend to them in 1 minute because we have a very important management joining us. The Bank of Baroda management. The bank, of course, reported a loss of over 800 crore rupees in the first quarter, and that was largely because of high provisioning for standard accounts. Asset quality has improved, a marginal drop in NPAs quarter on quarter. Sanjeev Chadha, Managing Director and CEO of Bank of Baroda, joins us now. Mr. Chadha, good morning. Thank you very much for joining us. Well, we know that your moratorium term loan moratorium is 21%. But can you give a like-to-like comparison previous quarter, also the retail corporate split?
I think the moratorium is again something which has been a bit of a conundrum in terms of how different definitions have come about. On our part, 2 things have changed. One is that in the first instance, we had given an opt-out clause for moratorium. So the moratorium for BOB was high, right? It was in the region of 60% plus. What we did in the second round of moratorium was we said that for borrowers who are up to 10 lakhs, which is a very large number, we give an opt-out again, simply because in a COVID times, it is difficult for them to reach out to us. But for borrowers above 10 lakhs, which is about 90% of our portfolio, we will make it an opt-in. Now, that has had a very significant impact. And as of now, our term loan book, which is under moratorium, is about 21% of our total. So that is where the figure stands. The term loan which under moratorium is 21% of our total loan book. And for this, we have taken the definition that if your last installment, which was due, if that has not been paid, we will assume it is under moratorium, which means even if somebody has paid 2 installments out of 4 or 5, even then we will assume it's under moratorium in case you have not paid the last installment. Because the last installment is what really shows the propensity to pay or the ability to pay. So that's how we have defined it. It's a little tighter definition, but that's how we're looking at it.
I agree, it's tighter. If I remember right, SBI said 2 installments. But now this 21%, since you say it's only for term loan, what does it compare for the previous quarter?
We had started off with about a figure of about 60% odd, which was there, right? But again, the fact is that here we have, again, just to make sure that we are totally aligned when it comes to how all banks are looking at it. I'll repeat, we are only looking at a term loan book and what percentage is that of our total.
Okay, no, I guess that because I wanted to know about the retail moratorium. The Reserve Bank's Financial Stability Report gave a very high number for retail moratorium as of April 30th. They said 55%. So what's your number for retail?
It is not. So as of now, our retail of the total accounts which are under moratorium, about 21%, about 10%, which is about half of that is accounted by the corporate book, right? The retail book accounts for about 7%, a third of that. So in terms of amount, I think if we were looking at it, it would be probably significantly lower. I can just fish out the amount available, 50,000. I think it's significantly lower. I can just give you the exact amount. It's 7% of the total is retail.
So for the benefit of our viewers, can you tell us what is the moratorium percentage in terms of the total number of borrowers?
I could certainly give you that, but what I would want to emphasize is that, as I mentioned, we have given the opt-out option to all borrowers under 10 lakhs. In terms of number of borrowers, they obviously are the overwhelming majority. But when it comes to, again, looking at the quality of the book, the impact of the moratorium, what kind of stress could be, I think the value is the relevant metrics, which is where the 21% figure comes from.
21%. Okay, so in your assessment, how many of these borrowers will seek restructuring?
You can say that there are two narratives which could play in opposite directions. A, it is the fact that it's the moment we ask people to opt in, right? We actually, our moratorium came down precipitously. So that would suggest that there is an ability to pay, which is what we had been arguing. The fact that 60% of a book, again, appears to be in a moratorium is not an indication in terms of stress. And the fact that the figure has come down so much to half or less than half, I think that possibly is testimony to that. So that's number one. Number two, when we're looking at even of this 21%, about 6% is the figure which is still under the opt-out one, right? So that also something, the moment, again, the moratorium goes off, that will also come down. So it would be certainly be a fraction of this 21%. Tough to say where the figure would end up.
Oh, that's good to hear. Okay, now let me come to the low-cost deposits. Your CASA has actually increased. Now with the RBI's new circular, are you expecting that you will be able to attract more borrowers to open current account with you?
So I think when it comes to banks like us, it will certainly be an advantage, because for our borrowers, it is certainly true that some of them have current account with other banks. But whether it is going to result in a significant accretion to the current account balance, I'm not so sure. I think the biggest upside is in terms of credit discipline, which is something which is going to help a lot. Because if a borrower is a borrower with you, right, then even if the money is going to your account, it would go towards reducing your loan account balance mostly, not so much in, again, an accrual of the deposit balance.
Okay. Mr. Chadha, many banks have reported actually a rise in NIMs in the June quarter, but yours has fallen.
It really, I would be privy to the accounts of those banks. It's a function of two things. One is the yield on advances and the other is the cost of deposits. I think it's unarguable that given the overhang of liquidity, there is pressure on the corporate book, particularly the highly rated accounts, in terms of the yields that you get on them. We have tried to counteract that by having a larger percentage of CASA deposits, which have gone out significantly, which is why the impact has been contained. Having said that, with the liquidity overhang persisting, I think it's only fair to surmise that even over the next few quarters, there will be some pressure as far as margins are concerned.
But you're saying some pressure, but can it improve this quarter? I mean, over the next 2 quarters, it can if your current account share increases, right?
We certainly would want to improve margins, and I think the trick of that lies in the composition of the portfolio. But I don't believe that the current account dispensation in the short term is something which is going to have a very significant impact as far as accretion of deposits is concerned.
Okay, so I want to ask you about capital raising, because you're just on the threshold in terms of capital. Many banks are raising capital right now. Would you want to join that bandwagon?
I hope they remain kind. So we had announced that we'll be raising about 13,500 crores of capital, 4,500 by way of AT1 and 9,000 crores by way of pure equity. We are almost halfway through our AT1. We have raised 2 tranches, and the balance should get done probably over the next quarter or so. As far as the pure equity piece is concerned, we of course need to consult a principal shareholder and to time that right, also choose the right instrument. So that is possibly something which we should be looking at in the second half of the year.
Second half. Okay, you know what? The analyst perception is that if a bank has enough capital, it will have the space to reject restructuring in unviable cases because it has the capacity to take the hit. What is your view in Bank of Baroda?
I don't think that is going to be a challenge at all, because one, as we see that the book which is under moratorium, which would have slipped otherwise, right? For that, we have anyway provided anything between 10 to 20%. And as per the RBI dispensation, even if there is restructuring as far as those loans are concerned, you end up providing 10%, right? So to that extent, there is no extra capital or provisioning which is required on that account. The second part, of course, is that you ultimately are looking at, again, what is in the best interest of the borrower, because that is ultimately in the bank's best interest. So I don't believe there will be at all a case where we don't restructure where we need to, regardless of capital, and where we restructure if we don't need to.
Got that. Finally, then, what kind of loan growth are you targeting for the full year?
We're looking at a loan growth of about 7 to 8% this year. And we would want to grow our deposit book also in the same proportion. As of now, if you look at our YOY figures, they seem to be pretty much in line, a little above that. And also the momentum is picked up again on a quarter-to-quarter basis. So I think we have put out some figures on that. So if you see the YOY change in advances, it had gone down to about 2.8, 2.9%. And in last quarter, the YOY is up to 8.6%. So I think whatever the guidance is, 7-8%, that seems to be workable.
Finally, Mr. Chadha, may I persist on the timing of capital raising because the markets are in a giving mood now. So will it be sooner rather than later?
You are absolutely right that the timing is right. So there's no doubt about it. So, but now we are in the month of August. So as I mentioned earlier also, the second half of the year is the likely time.
Oh, okay. Second half is the likely time. Thank you very much, Mr. Chadha, for joining us with a wealth of details. Okay, so that's the Bank of Baroda management. The stock obviously has taken hit because the moratorium is higher than, say, State Bank's moratorium. But, it's important that he said that anybody who has not paid the last installment will be treated as moratorium, whereas which means three installments. Whereas SBI said anybody who has paid 2 installments, they have assumed has not paid moratorium. So my sense is his sieve is a little stricter.
Okay, that's a very interesting point, Tata. But the pre-open, by the way, has settled. And courtesy ICICI Bank, the Bank Nifty is opening slightly better compared to the Nifty, 150 points higher. The Nifty is about 52 points higher. Let's look at where Titan settled in pre-open, 3% down. Poor result, and of course visibility is only in Q4 and expensive stock. So let's see how that one reacts. Shree Cement as well, reacting to numbers down 2%. Ashwini, if we open here, what's the call and what's your 910 stock call?
See, first of all, just one comment. All these guys raising capital is great fun, but they are taking money from the equity market, so that people should take on board. Whenever this sort of large fundraising happens, it often leads to corrections. Having said that, no chasing, pre-open isn't very great. I would still like to buy on a collapse rather than, chasing these gap ups. Unlikely you will get a very large range day, but let's see. JSW Steel would be a buy right now with a stop around 240 and target of 265.
That's an important point. Also yesterday, remember the close wasn't that great. The market opening was good, but towards the end we did see some profit taking. Sudarshan, what's your 910 call?
Well, buy the Nifty on a dip towards 11,300. Keep a tight stop of 11,240. Glenmark is a buy with a stop at 449 and a target of 524.
By the way, the fun and games have happened in Yes Bank this month. It's up 30% this month after testing its FPO price. Now back to 15.5 on that one. Vodafone Idea starting 2% lower. Mitesh, your 910 call?
Yeah, I would choose a buy on L&T. Keep a stop at 940. Look for targets of around 1,000.
Couple of more stocks. Titan and Shree Cement, by the way, are both down about 2 to 3% right now, post their numbers. And a couple of these auto stocks are continue to see an up move. So Eicher Motors is up almost 1% today. It's back above the 21,000 mark, by the way. Big recovery there in that stock. And Tata Motors as well, 125. So that's been a 20% gain for Tata Motors in the month of August already. So autos have definitely made a big comeback.
One giant is pulling down is HDFC Bank. Minorly down, but still of the 5 stocks that are in the red, one of them happens to be HDFC Bank. So that's taking away perhaps a bit of a shine. But this is a time that we get you the standout brokerages. Our colleague Nimesh looks through a bunch of them and picks out what stands out for him. Nimesh, what do you have on your plate?
Hi Lata, so today the stock on the radar is Tech Mahindra. Citi has opened a 90-day positive catalyst on the stock. They have a buy rating with a target price of 800. They believe that Q2 will give a lot of comfort to the investors who had a lot of concerns with regards to the margins and the visibility on the revenue as well. So they expect in Q2 the margins to be 11.5%, and for FY22 the margins to go to 13%. Even in terms of revenue and visibility, they expect Q2 will give a lot of comfort to the investors who had concerns regarding that. So they have they have opened a positive catalyst, and they believe that the stock will grind higher going forward, and it's one of the cheapest stock in the IT peers. So that's the reason they've been bullish on the stock, and they've opened a 90-day positive catalyst. So watch out for that stock in today's trade.
Okay, Nimesh, thanks a lot for that. By the way, the Nifty IT index is very close to a 52-week high. I mean, if it could hit that today. A large part of that is because of Infosys. TCS as well has been doing well, but IT has been a decent performer all through this while in this market.
Okay.
The bank Nifty is doing well largely because of ICICI Bank right now. I mean, we don't know what happens when the market opens. Kotak Mahindra Bank has been one of the strong performers, pillars for the Nifty Bank for the past couple of days. Today, that's also working for it. And